We've talked a lot over the years about zombie companies, those companies that have not been able to make any principal payments, let alone all of their interest payments, for at least 3 years. But the banks and other lenders don't want that to show up on their books, so they loan them the money so that they can at least make most of their interest payment. And then any excess goes on. And so what they're really growing? The IMF just did a paper, The Rise of the Walking Dead, Zombie Firms Around the World. The term zombie company was applied to Japanese firms supported by Japanese banks during the period known as the Lost Decade. You've probably heard of that. After the collapse of the Japanese asset price bubble around 1990, so in the early 90s. Now, I could tell you that even through today, those assets have not recouped. And residential real estate dropped 85%, commercial dropped 95%. Opportunities are ahead of us. But Japan, thanks to Japan, who introduced this, zombie companies are indebted businesses that, although generating cash, after covering running costs and fixed costs, wages, rents, rates, rent, only have enough funds to service the interest on their loans, but not on the debt itself, and not all the interest, by the way. As such, they are generally dependent on the refinancing of maturing debt for their continued existence and may face solvency risks should interest rates rise or investors withdraw from further financing. So we need to keep this hidden. Do you not remember back in 2020 when the government just opened the money spigots and interest rates at zero, encouraging all of these zombie companies to just keep walking? And isn't that what they did in 2008 as well? Have you thought of Citicorp as a zombie company? And yet we bailed them out. We taxpayers bailed them out and kept them alive. Well, is that going to continue? I don't know. Let's take a look. Figure 1 shows several interesting patterns. Here's figure 1. First, the share of zombie firms for both listed and private firms has been steadily increasing over the last 20 years, especially after the great financial crisis, so 2008. Low interest rates, ample liquidity, and search for yield may, because we don't want to take any credit for the mess that we're in, may have been related to this upward trend. But what I would really like to point out to you in here is that the gold are the private zombie companies, and yep, they're up. But gosh, in 2000 is when they started listing these companies that were zombie companies, transferring the risk from the private world into the public realm. So when I say that they're listed, they're on the stock exchange. So you're not going to know this, right? Is your stockbroker or whoever is helping you make these choices, do you think they understand this? And if you want to be sure, how about having a conversation with them and say, hey, tell me about the zombie companies. Do you know whether or not I own any of these zombie companies? Because their life or their appearance of life, which is a much better way to say it, is based on being able to continuously borrow more money. I don't know, kind of like the governments, right? Do they ever reduce the debt? No, they don't reduce the debt. They just roll it over and borrow more. And it's the same thing here. But when you're at the end of a currency's life cycle, doing this becomes a challenge. And so now, as they're trying to roll over this debt, they're doing it in a higher interest rate environment. And, they were supposed to retire the debt and reduce their balance sheet. Instead, because of the 15 years of zero interest rate policy, they didn't reduce that debt. Yeah, they rolled it over, but they actually took on more and more and more. So we've got a big problem if they couldn't pay it in an easy environment. How in the world are they going to pay it in this much harder environment? And what do you think is going to happen when this time bomb explodes? Because our entire system globally is incestuously intertwined. So it doesn't really matter which fuse ignites the bomb. It's all going down at the same time, really. They'll try and postpone it as much as they can. But here's Japan's share of zombie companies, right? That is pretty big. Where does the US sit in here? Oh, right there. We're not that far down. And in fact, we also show novel results pointing to reduced credit supply to non-zombies that compete with zombie firms. So in other words, you've got corporations that are earning enough to pay their interest and part of the principal to reduce their debt. Remember, there's two different kinds of debts. There is self-liquidating debt, and then there's non-self-liquidating debt. This is a perfect example of that. A non-zombie company would take on debt to expand their company, make more money, and use that money to pay off that debt. But then you have the other kind of debt where these banks are giving them that money to zombie corporations that they know can't even pay all of the interest and forget any of the principal. Well, in an ample reserve environment like we've been in, where there's just so much free money around, well then, okay, banks didn't need to make, or whoever's financing this private credit, they didn't need to make that choice. But we are also in an environment with tightening credit. So increasing interest rates and tightening credit, these entities are going to have to make choices, including governments. They are going to have to make choices on who gets new debt money.